Yep, there we are. Welcome everyone. Good to have you here. Another day, another live stream. So, what's up everyone? Hopefully you've been doing very well. There we are, price at 109k. Damn, we've been talking about that level for such a long time. And we got denied last week of moving to 109k, and price decided to range between 108 and 105. But here we are 1 week later, reaching the weekly point of control. And yeah, we're going to cover mainly two Elliott Wave scenarios. I have an alternative third one, which is not actually in my folders, but it's in my head. And I want to share that one as well. It was also shared by Razor in Discord in the Gold channel. And other than that, I think that in this live stream, we have a lot of time for chatting and Q&A. Because the analysis is relatively short, I will explain what the scenarios are, explain what to look for, and how probabilities may change between the two. And then we take it from there. I also believe, I've only read it once very quickly in Discord, but I think the markets might be closed tomorrow. I'm not actually sure. I think I read it. If Odin is here, I'm not sure if Odin is here, but I think the markets were closed. Markets. Yeah, okay, it is. Yeah, okay, it is. So generally, thanks guys. Yeah, so generally when the markets are closed, price is not very volatile. Exceptions are there, but yeah, see what we get. You know, if there's any volatility, preferably in the final hours of today, but if not, then generally one can expect a bit more of a ranging structure. And then we have the weekend, and the weekend, of course, is notorious for sideways ranges like we had last weekend as well over here, right? Nice weekend range. And then during the week, eventually, of course, we move up, down, grab the liquidity and up. Also touch the daily naked point of control that we had over here. Absolute perfection, which is always nice to see. I can remove it now from my chart because it is irrelevant. It has been touched. It's done its job and the price moved up. I do like to keep the weekly point of control still on my chart, just in case, because we are hovering around the level. It's interesting to see what happens. But as you can see so far, it's just been acting as a resistance. So Independence Day, I see. Everyone has a day off. Also, it's the first time that I see the crowns here, which apparently has to do with top fans. So we will be keeping an eye on this because I don't yet know what this is. It's the first time I see it. I've not read about it. I didn't get a YouTube notification or whatever about it. We have a question mark here. So it says, what's the leaderboard? Place for fans to stand out in the community. The top 3 get special badges in live chat. Resets every stream. How do you get on the leaderboard? You'll need to collect experience points or XP. Here's how you get them. Send live messages, send super chats and super stickers. Okay. Okay, well, there we go. Learn something new. I suppose this is going to be a standard thing now in YouTube. So I don't know if I can turn it on or off. It's on now. Surprise. I had no idea. David, welcome. Hunter, Nabil, what's up? Siamak, welcome. Legendario, Sibel, Ayo. How are you doing, Sibel? Rapper from the Netherlands. Emre, Jinx, welcome. Good to have you guys here. And thanks for answering the question. Vladimir, welcome. Tino, how are we doing today? We're doing good. We are doing good. So we can spam and get rewards. Exactly. That's basically the summary, no? Okay, let's cover the Elliott Wave scenarios. I will cover my levels as well. And then what I look for. One drop. It's been a while. Welcome. Good to have you here, man. Welcome, welcome. Member for 13 months. 1 year and 1 month. Beautiful blue badge. Now, cheers. Welcome. One drop. Thanks for, I suppose in Twitch you would say resubbing. But appreciate the 13-month support, man. Okay. Let's start. We have a bullish and a bearish scenario, and then I have an alternative which I don't actually have on my chart. I don't want to put it in my folders just yet, as I have a preference for the two that I currently have in my folders. So I like to present these two to you, and then also what am I looking for, okay? So bullish scenario, right? Not too much has changed. Finished a 3-wave structure, 5 move up in a wave 1. And as you know, at least for the ones that have been here the past week and also the previous week, you know that, I mean, I should actually say previous week, you know that we were looking for a retracement to the downside, preferably into the fibs and into support. Now, what do I mean with into the fibs? You take a fib from the start to the end of wave 1. You toggle on the fibs, and you really want to at least touch the 2, 3, 6 for a wave 2, a wave B, a wave X. Anything more shallow than a 2, 3, 6, I mean, it's very low probability. So the fact that over here price did not move into the fibs, it was too shallow, probability is higher to still move down. And just by looking at the thumbnails of the videos of last week, you get a very good idea of what we were looking for. Now, then we had the daily naked point of control, which I just removed from my chart earlier this live stream. It was on my chart a few minutes ago, and I showed it, right? We had a level over here at 105. That has been touched, price moved up. Now, what we want to see in this case is impulsive moves towards the upside. Right, and corrective moves to the downside. And that is an important distinction with the more bearish scenario, which I will share up next. Because in the bearish scenario, you want an impulsive move to the downside, not a corrective structure. So what I would like to see for price to continue the trend is a multi 1-2, meaning a 1-2, 1-2, 1-2, maybe another one, and then you go. Because the wave 3, after multiple 1-2s, should be very strong. And mind you that after wave 3, you still expect a 4-5, 4-5, 4-5. So you can really extend to higher levels. If you get only a single 1, 2, 3, 4, 5 wave structure, you expect a bigger retracement again, right? So what we would like to see is similar to what we had here, right? For the bulls, that is 49K low. Price moved up in a multi 1-2, and then eventually it moves up, right? And you get the big push to the upside, and then you still get your 4-5, 4-5, 4-5s, right? Creating higher highs, even though volume is slowing down and price is going to move more sideways. It's not as sharp anymore. You have a very, very clear gap, as you can see, right? And you have a grinding, ranging structure to the upside before the push, and then you get the same after the push, right? And that is when you know you are working on wave 4s and wave 5s, and you would expect retracements to happen, which, I mean, this was already quite a nice retracement, but then the deeper one, of course, came soon after. So more bullish would be building a multi 1-2, where we have a wave 1, 2, create another 1-2, 1-2, and a couple more, and then eventually go. Invalidation is the 105K low, and every move to the downside has to be corrective. So we're looking for a zigzag structure, right? A zigzag or a double zigzag, a flat, right? A WXY, sideways or sharp with the double zigzag, of course. What we are not looking for is triangles, preferably, right? Because a triangle can only exist in a wave 4. If we look at an impulse, that is, it can't be a wave 2, right? So that would be a sign. If we form triangles, I got to be aware that we might get one more push in a 5 and then fall down. But if we want to see more bullish price action, preferably we build a multi 1-2 and then fly up in a wave 3. Now we have a little bit of resistance to the upside that is not yet touched. So currently we are at the weekly point of control, right? 109.6K, clearly acting as resistance. We've been talking about this level for so long, and yeah, it's been holding so far. Then to the upside, daily naked point of control at 110.9K, which is interesting. And then just below the all-time high, we have another daily naked point of control. And we also have one daily close to all-time high, but I don't know. I don't really care about that daily. I care more about the volume levels, to be honest. So this is what bulls want to see. Very nice. We cannot be biased to a single direction. And that is why, of course, every Elliott Wave analyst also needs a bearish alternative, which is what you see here, a flat. Now, preferably, we get a little bit more upside to touch 110.6K, which not yet happened, at least not 622. We got close, though. The high on my chart is 110.590, but we need to hit the 0.9, which is a minimum target for a flat wave B. So this is your bearish scenario, where the double zigzag here is only a wave A. Right? In the bullish scenario, this WXY is the end, and you count 1, 2, 3. In the bearish scenario, the WXY is a wave A in a flat. Then this move up is counted as a wave A in a zigzag, shallow wave B. Look for a wave C towards the upside to at least touch the 0.9. It can move higher, no problem. It could even take out the all-time high, no problem, right? You don't want wave B to move all the way to the 1.618. Where is it? There it is. Which is 120K, a little bit high, but let's just say wave B has still quite a big margin. But by all means, wave B has to be a three-wave structure. And it would be nice for that to be an A, B, and then a wave C to the upside. Now, after you finish a wave C and therefore your wave B, at least touching the 0.9, that's a minimum target, which we have not yet touched. We got close, but we are $32 away from reaching the 0.9, so it's not touched, right? Rules or requirements are requirements. I wanted to say rules are rules, but in theory, there's only 3 rules in Elliott waves which have to do with an impulse. All the others are requirements and guidelines. But yeah, for a wave C to the downside, we want to see an impulsive move to the downside. And that is where the difference lies between the two scenarios. In the bullish scenario, you want impulsive moves up, corrective moves down. In the bearish scenario, you want a impulsive move down and corrective moves up. It's literally the opposite, right? So what you're looking for is a wave 1, 2, 3, 4, 5 wave impulsive structure, then a corrective mess back towards the upside, right? And then down you go. Right, and then you're going to label a wave 1, wave 2, you look for a 3, eventually you look for a 4, and a final move to the downside in a wave 5. So that is currently what I'm keeping an eye on. Price is now at resistance. This for me is an important take profit area, right, from a risk management point of view. Can we continue and build 1-2s and eventually move up in a wave 3? Sure, right, absolutely. There's no reason to not think that, right? There's no invalidation that is touched. At least not yet, right? The invalidation is the low here. Price is currently still ranging all the way at 109. But at least I'm aware that we're also very close to the key area for the bearish scenario, which is the flat, even though preferably, of course, we go a little bit higher. So that is what I'm looking for, right? And yeah, I'm not based on this price action. I'm not actually looking at just like this at the moment. It's very, very slow. On a 1-hour time frame, you can see that price moved up, but it starts to curve, right? It starts to curve. If we open the volume, high amount of volume in this push here, volume is moving down, price is slowly curving. So it starts to range on the 1-hour time frame. So I'm not at the moment looking at just a straight line towards the upside, which makes more sense, therefore, for a multi-1-2 and a little bit higher, still preferably for a flat structure, right, in the ABC, to maybe get some diagonal whatever structure inside your wave C, get a bit of a grind up, then get a 1 down, a grind. This is your weekend and your Friday, right? And then weeks opens, that's your wave 3 in the bearish case, right? In the bullish case, during the weekend or Friday, you end your diagonal, you get a wave 2, right? Maybe you get another wave 1, another 2, and then this is your weekend price action. So the upcoming days can be quite messy. It can be a very ranging and slow environment due to the markets being closed on Friday, Saturday, and Sunday. And then on Monday, maybe we get some spice. We get some interesting stuff happening on the chart. So these are the two that I keep an eye on. Now, I promise that I do have an alternative, which is only in my mind. And that's because I don't really have it as the highest probability scenario, and I only really want to present the higher one. So WXY, W is the same as in the other scenarios, zigzag, X, zigzag, and then wave Y being a flat in an ABC. Now, in this particular case, the minimum target for a flat would already be touched, or is already touched, because that's the 0.9 and the 0.9 is touched. So in theory, it then doesn't need to go any higher, right? And it can just fall down already in an impulsive move. But nonetheless, from a trading point of view, it's not too different to knowing the other two scenarios and just forgetting about this, because in the bearish scenario that I just presented, you're also looking for a wave C to the downside, even though you want to touch the 0.9 first. But from a risk-reward perspective, the daily naked point of control is here. This move up was traded. Am I really going to wait for a $32 move to touch the 0.9 to get my TP out there while my risk is now, of course, losing the profit that I made? No, right? That's not really sensible trading. I personally prefer to get a little bit out and then see what price action does. But this is like something I have it in my mind. The reason it's not really preferred is that wave Y is starting to be quite long in time. Take a fib time from the start to the end of W to the end of wave X. And you can see, let me actually use this one here, that we are now approaching the 2 fib time. Still fine, but if you get a C down, then it better has to happen quick. But the markets are going to be closed tomorrow, Saturday, and Sunday, which means that probability-wise, probabilities are higher for ranging structures. While if this would be wave Y in an AB, we need a C down. C is an impulse. But the markets are closed tomorrow and on Saturday and on Sunday. So what's the chance of getting an impulse to the downside in a relatively short amount of time, right? Now, the 2 fib time here that you see on my chart is on Tuesday, 6 a.m. So sure, there's still a bit of time after the weekend, but wave Y by that day is then going to be twice the length of wave W, right? So that's not a problem per se, right? But it starts to be on the longer side. So we'll just observe. I prefer the flat and the multi-1, 2, and then based on the range, well, we'll know more. We just got to wait a little bit. Oh, wait, is my live chart off? No, it's on. I'll check the full question in a second. So yeah, this is what I'm looking for, and it's just waiting a bit for local price action to show what it wants to do, right? Quite simply, we are at resistance, right? Not at support. We were at support over here. Daily naked point of control was touched, and we get a very nice move towards the upside. Also nicely identified, of course, last week that an impulse preferably finishes over here, right? Using the channel. I will explain this. If you don't know about channeling and Elliott waves, I'll put it on my chart again. But the probabilities were high to still move up because probabilities were high that this is the end of an impulse. Therefore, this higher probabilities, this is either a wave B or an X, which means a corrective high, which means probabilities are high to move up and take out that high. That's what you're looking for, which means any support that's basically getting touched is a potential buying opportunity. Now, with regards to channeling, this is what you do. So, of course, initially the question is, where do you put all of this, right? Do you put your wave 5? Let me make it a little bit bigger. Are you going to put wave 5 over here? Or are you going to put wave 5 over there, right? Now, what you can do is you take a channel from the start of 1 to the end of 1, to the end of 2 to the end of 1, right? And this is a base channel. And what you want to see is wave 3 moves out of the base channel, wave 4 then comes back, and then you get your final leg in a wave 5. But you don't want to break the lower trend line of the base channel. The moment you do, probabilities are very low that you're still looking at an impulse, right? You're looking most likely at a corrective structure or at least a new structure that is forming. So the fact that price here broke the trend line created a new high afterwards, increase the probabilities that these highs here are corrective in either a B or X, not a wave 5. Which therefore means, right, you get an impulse off the low, you get a corrective, higher probability move, which means you're going to be looking for continuation as the highest probability trade, right, highest probability direction. Which is the reason why in the previous update we were looking for price to move to 109 to 111K, and then we can observe it from there, no? So this is where it comes from. And if you have watched the content, you know about this channel because I also explained it in the videos. But it's very useful, right? It's very useful to use some channels sometimes in Elliott waves. Okay. With regards to levels, let me show you the levels that I have on my chart. This is currently everything on my chart. Thanks to the YouTube comment that said, do we have a new monthly naked point of control? Yes or no? Because I actually didn't have it on my chart in the previous video, I believe, because I forgot to check the point of control of last month. But we do at 105. So that is a new level here on the chart, as well as the daily naked point of control. Right, some local levels to the downside. This one here now touched resistances to the upside. And yeah, if you want to use these levels on your chart, I mean, here you go. So there you go. So that is that. That is that. Very nice. Oh, another thing that I can talk about before moving into chatting and Q&A, which I suppose is just interesting knowledge to have, right, is this. So in the previous video, you'll see that we had the potential of a W, right, X, and then a flat in a Y, which means we were looking for price to move to 109. Right, that was also the common target for a flat B in this case, right? This is then your B. You don't want to touch the 1.618, right? So price touch the 1.618. Now, the moment you do, you're not going to be looking at an ABC anymore in a flat wave Y like this, right? This AB, this specific WXY on my chart. Probabilities increase that this move up is not part of a wave B of a flat, at least not this one, but it's higher probability that this is then going to be a wave C, right? It's not part of a corrective structure. Probabilities are higher. This was the end of a corrective structure. That's it. And this is the second leg matching the first, right? So you have your first move up, your correction, and your second leg up. You touch the 1.618, low probabilities. You're looking at a bigger move here, right? In an ABC, a flat like this. Probability is higher. This is part of the second leg of what you see here, right? Either in an ABC corrective structure, or you're looking at a 1-2-1-2 bullish scenario, right? So this then becomes either a wave 1 or it's going to be a wave C. That's basically then the two things you're going to be looking at. So touching the 1.618 actually gives a lot of information, and therefore my count also changed from the WXY to the flat, because you always need a bearish scenario, right? As well as in a bear market, you always need a bullish scenario, right? And then you just need to wait and see what price gives you to make well-informed decisions. So cool. That's that. So let me put the levels on the chart. If anything comes up, I'll make sure to let you guys know. But let's get into chat and Q&A. Let's do this. Okay. There we go. Which also means, of course, if price is going to move below the low, that's not good for bulls, because you're not looking at a flat in a wave 2, nor a flat in a wave Y. If you're going to move down here, you might probably you're going to be looking for an impulse down, right? Expect a deeper retracement. Okay. Let's have a look. The points reset at the end of the stream. Points are available for each stream. As the stream progresses, anyone can click with the crown at the top of the chart to see current placement. Okay. Okay, so you guys see it as well. Interesting. Oh, you can keep an eye on the list at the end. Crypto Princess, welcome. Good to have you here. If you haven't seen it yet, on the YouTube channel of Crypto Princess, there are 2 interviews with me. One more about my journey. The other one was focused on Elliott Waves. She's a great host, interviews many people, and interviews with well-known creators or people in this space. I also managed to connect Crypto Princess with Andy, David, and Jared. Jared is the author of the Mental Game of Trading, and which is my favorite trading psychology book. So yeah, very, very exciting channel. Lots of information being shared there, so make sure to check it out. But thanks, Crypto Princess, for popping in. Matthew, welcome. 121 watches, 34 likes. No worries, no worries. 58 now, but as long as the people that are here enjoy the content, right? You know what to do. All-time high or wow? CME took the previous high, the 110.7. Okay, this one here. Yeah, not yet on my chart. Oh, very close, very close. But I just missed out on taking it out. Actually, I never really look at the CME chart. Do we have any gaps that are worth considering? Kiwi. Wow. Kiwi, good morning, by the way. Happy Friday. Icons, is there a way to put your live chart on the Tradingview app rather than just opening it in a browser? I don't think so, actually. I think in that case, you would need to just open Google or any browser in your... wait, which webcam is on? Oh, this one. You probably have to open your browser on your phone and then open it on the phone. So it just becomes part of the Google app or Safari app or whatever browser you have. I don't think you can open my chart in the Tradingview app, I'm afraid. Would you take RSI, MACD, or volume into consideration if both scenarios seem equally probable? Well, I don't actually use RSI, MACD myself. I do use volume. I love volume levels, like the point of controls. I always keep an eye on volume with regards to Elliott waves, right? Wave Cs, wave 3s, WXYs, etc. Volume plays an important role in identifying waves as well. So that's something I'll keep an eye on, but I don't actually look at RSI and MACD. I'm one of the maybe few that don't actually use, that doesn't actually use RSI, or MACD, which are well-known indicators in combination with Elliott waves. I personally prefer to use CVD over RSI, MACD, the standard, I suppose, the generally industry standard indicators. So, yeah. Cheers, Theo. And also Divinehood, what's up? Divinehood, everyone. Also a content creator on his other channel, not on this one. He has another channel, Divinehood Trading. Also doing Elliott waves, but also other stuff. You can check him out if you want to. Cheers, Theo Sterling. Hi, Koens. Can you check the internal wave 3 of your wave 1? Looks too short. It is shorter than wave 1 and 5. The internal wave, the internal wave 3 of your wave 1. If you're talking about the wave 3 here, this wave 3 is longer than 1 and longer than 5. The internal wave, the internal wave 3 of the wave... Oh, yeah, I had this question previously. So these are the low time frame warriors. Big respect. I used to do this back in the day. It used to be a low time frame one. So first of all, I really recommend you to not hang out and do Elliott wave counts on this low time frames. I always see in Discord, in the Elliott wave channel, people counting the 1 minute, 2 minute, 3 minute, 5 minute. Holy moly, bonkers. So on a very low time frame, right? you're looking at this move here. That's your wave 3, right? That's your wave 3. I would probably count this as having a wave 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5. That is how I would approach it. And then just therefore, this becomes a 5-wave structure, and that's your wave 5. This is a wave 5, and that's a wave 5. And your wave 3 is actually in here, which is then longer than the wave 1s. So yeah, it might look obvious to count it as a 1, 2, 3, 4, 5, and then this becomes the shortest. But yeah, I would count it differently. To avoid having 3 the shortest. Because if you zoom out, and that's probably what many people should do, when you then zoom out to a higher time frame, right? And you look at the structure to the upside, right? It counts nicely as a 5-waver, and then you avoid the absolute detail on the lower time frames. But like, I know where it comes from. I had this question previously as well, I think in the previous live stream. And it is also something that I looked at myself, which is the reason I can just answer the question quick as well. Because when this move was printing and I saw the 2 ranges here in the middle, I was also like, okay, that doesn't look very nice, right? It's definitely not a nice 1, 2, 3, 4, 5, because 3 would be shortest. But then I went to a 3-minute and a 1-minute. And yeah, sure, there could be a couple of 1-2s on the lower time frames at the beginning, which then leads to your 4-5s at a later stage. And then, okay, we could maybe have an impulse in there. But if you don't really know what's going on, just wait, right? So you get this move towards the upside on a high volume. You're waiting, waiting, right? You just wait for clarity to come. And the moment you break the channel that I explained earlier, right, like, okay, it definitely looks 5-wavy, preferably that ends over there, but we did make another high. What's the alternative, right? If this is not a 5, right, if this is not a 5, then how would we count this, right? Unrelated to what we see here, you're probably going to be looking at a W, X, and a Y, right? If you want to end it here. If you want to end something here, you need to have A, B, and a C, right? Or somehow you need like a W, X, and then a wave Y. But in all of these scenarios, this is an impulse, right? So this internally is not counted as a 3-wave structure. We can't. It's always counted as an impulse. So by considering different counts in this area, you realize quickly, like, well, there's not really another great way to count this as a 3-waver. So it's probably a 5. And instead of then looking on the 3-minute time frame, probably better to zoom out and go to a 1-hour time frame like I do now, and just have a bit more patience with the chart. Really try to trade the best probability setups, right? This move down, we were looking for another leg up because probabilities were higher. This is a B or an X, right? And then every area of support is a potential long trade. We touched the daily naked point of control to the absolute T, and price moved up at 105.4K. That's a high probability setup. So yeah. If you're relatively new, preferably stay a little bit on the higher time frames, even though I've been there. I was on the 1-min, 3-min, 5-min, as Bearbit will know. Because when I started my journey, I was in touch with Bearbit, and I was always sharing 1, 3, and 5-minute stuff. It's great for practice, right? It goes very quick, but don't trust it. Just zoom out a little. A lot better. I personally recommend, and that's also my experience. I've been through all the phases. My experience is it's better if you're learning to stick around on a preferably 4-hour time frame, 1 hour possible, but the 4 hour is generally very clean, and just use multiple charts. And then when things change on a 4-hour time frame, which is a few times a week, just come back to the chart. Take your notebook again, right, and write things down. And what options do we have now? And the 4 hour is a very nice time frame because price action is not too quick. Scenarios are not changing every couple of minutes, every couple of hours. So it gives you a lot of time to think, consider, do other charts as well. And if you have 10 or 20 charts that you analyze from an Elliott Wave point of view, you probably have something going on every time, but at least you're working on a higher time frame, right? Which should give you better probabilities also from a trading point of view, at least more clarity instead of 1 minute stuff. 4:30 a.m. Yo, why are you not asleep? Are you always awake this early? 4:30 a.m. He's this guy. Nice early morning. Respect. Yeah, it's just annoying it can't be in the app. Yeah, I know what you mean. That would be good feedback for Tradingview. Maybe add charts of other people and then have somehow like a little menu where you can select a chart of different people. You know, because if you open the app, you have, let me open Tradingview here. So you have at the bottom, right, you have watch list, chart, explore, ideas, menu. How cool would it be if you can make a watch list of people, of charts that you follow, and you can give them a name. So you can have a watch list, and then you have Koen's chart in there, and you have X, Y, Z chart of other people that you follow. Right? That would be pretty neat. And then it says if the chart is, if sharing is on or off, because the creator can turn it on or off, of course. Papa, the PVP indicator doesn't have a daily point of control at 107.2K. Can you check why? It's just a different calculation. I use ATAS for the blue levels. PVP I only use for weekly and monthly levels, not the daily ones. But it's just the way Tradingview and the indicator calculate the volume of the candles, which is different compared to ATAS. So I can go to a 50-minute. So here the volume is up here, you see? So here it's already touched. But in ATAS, this is the level. So therefore, that's the one I put on my chart. So I don't have another explanation except for the fact it's two different softwares, but I trust ATAS more than PVP. I only use PVP for weekly point of controls, right? I also, maybe you notice, I don't call them weekly naked point of controls because I want to reserve that term for the ATAS levels. Daily naked, DNPOC, WNPOC, those are the yellow levels. Where is it? Down here, for example, WNPOC, MNPOC, that's all ATAS, right? The red ones is, well, not this one. This is just a volume profile that I pulled myself. But the red ones that say WPOC, or maybe a red one that would be MPOC, those are PVP levels, which I do keep an eye on because they tend to be a little bit different compared to the ATAS levels. And they are high time frame levels, which makes them more interesting. So yeah, it's just a different calculation. I don't really have any other. There we go. Wait. Any other explanation? It's just a difference between platforms. But yeah, I really use ATAS for horizontals, and PVP is more like an extra. I keep an eye on the levels on the weekly and the monthly. Cheers, Divinehood. Also, welcome, Ilya. David, lurking, working, and trading. Divinehood, staying busy and ready for the long weekend. Yeah. Anyone doing interesting things during the weekend? Tomorrow, by the way, it's not yet weekend, but I won't be here for the whole day, which is the reason I decided to go live as well and show what I'm looking at. Because I'm going to be out and about the whole day. I have family over. My parents are here on this side of the world, and my dad and I are going for a very long hike in the mountains. So yeah, we're going to be out and about while the chart is going to do its thing. I'm going to head to bed now. Oh wait, you're going to bed. It's not like waking up. Well, have a good night, Kiwi. Have a good night. Thanks for popping in. Do you think alt analysis would be possible sometimes, Solana? Yeah, absolutely. We're 42 minutes in. I mean, let's have a look. What do we have here? Let me use this, organize my stuff a little. Channels, group 1. I don't know what group 1 is. Okay. Don't look at these red levels. These red levels here is just to organize my object tree. Okay. Let's see, what did we have here? So this is a bullish scenario. All right, one more wave 5. The base channel was almost touched on my chart, but the thing is that on a logarithmic time frame or logarithmic chart on a very high time frame, the channels are not as great as linear time frame. Linear chart lower time frame. So I don't really know what to think of the base channel here. Trend channel, of course, broken. So is it that interesting? Bearish scenario is a finished 5-wave move. Right, and then inside 3, you have 1, 2, 3, 4, 5. So with Solana, right, you're either in the final stages or you already have a finished move. This move down, we gotta observe this one here to check like what are probabilities saying, right? Are they corrective or impulsive? So we can have a look, because basically this move here decides probabilities. So I'm just checking what I have another base channel and another trend channel. Okay, no idea. Double. Simplified Elliott waves. Grind, move up, and a grind. Bit of a drop, but price has not moved into the fibs, I think. At least not touching the 382. Did touch the 236, even though that's always very shallow. Huh? Well, if you're going to move up and create another leg up, I mean, after that, you would expect that you're 5, preferably. I'm not really looking at this structure as a double 1-2, like 1-2, 1-2 up. It looks like either a finished impulse or you have another 4 and one more 5, and then that's that, right? So, okay, what's this? Oh, this is from a while ago. Final thoughts. Generally, expect a retracement with or without taking out the high once more. Wave 5 finished or one more move up and then finished. Move into the 4-5s is take profit area, patience. Okay, so what? So basically 4-5s, that's even in your bullish scenario, right? So 4-5, 4-5, maybe another 4-5, but 4-5s is take profit area. 1-2s is entry area. Recent move down gives a corrective feel. Oh yeah, so that must be this one here. We will observe this. Recent move down gives a corrective feel. 618 touch for wave 4. Though I'd prefer seeing some more price action. If price can confirm corrective price movement since all-time high and create an impulse up with a 3-wave retracement, interested to join for a move up. So this is probably what I shared in the video. Altcoin Elliott Wave Analysis. Let me have a look. Solana 2 months ago. Oh, it's been a while. It's been a little while. So if the move to the downside here is a higher probability impulse, you're going to look for a correction and another move down. Probability is higher. This is corrective. You're looking for a correction, whatever. And then eventually price continues up. Without going in too much detail, that's basically the approach. So with XRP, yes, my XRP is, I mean, nothing really changed, even though it's a month old over here. So this is still my analysis. I very much recommend this one. Let me just share this one. Just in case you want to watch it. Okay, 4 hour. So can we count the move to the downside as an impulse? Yes or no? Well, we had a wave 4 touching the 618, which probably is this one here. But anyway, little alarm. There we go. Let's have a look. If we want to count this as an impulsive structure, we turn on the volume. We need a couple of 1-2s. And we need a gap because wave 3 needs to gap the rest, or we look for diagonals. So the first thing I'm going to do is pull a couple of horizontal lines. Because wave 1 and wave 4 are not allowed to overlap. And then of course here, we have overlap all the way. So if we're looking at a impulse, then This low overlaps quite clearly. 1, 2, 3, 4, 5, 4, 1, 2, 3, 4, 5. Yeah, that doesn't work. Overlap between a 1 and a 4. So if this is going to be a wave 4, this can only be a wave 4 of this being a wave 2. Okay, so then that means this should be 2 of this being 4. 1, 2, 3, 4. No, these two preferably belong to one another. 1, 2. Also, this can't be a 2 with this being 4 because there's overlap. 1, 2, 1, 2, 1, 2. It's just going to be stupid. 1, 2, 1, 2, 1, 2, 1, 2, 3. You can't. 1, 2. So this is what I'm doing, and I recommend it. It's easier to count impulsive structures than corrective structures. So if you cannot count a high probability impulse, probabilities are higher, it's corrective. And you don't even really need to know what correction you're dealing with unless you really want to get into like detailed Elliott wave counting and stuff. But just for a directional bias, if the move down here would be a higher probability corrective, you look for upside, right? It's that simple. If the probabilities are higher, you got a clear impulse to the downside here. You got to be more careful, either wait for more information to buy, or you're looking just quite simply for a move to the downside, right? You're looking for a second leg. But so instead of thinking about all the rules and guidelines of corrective structures in this move down, I prefer to look for an impulse. And if I can't, I look for a diagonal. And if I can't, corrective, whatever it is. Very likely a zigzag family structure, by the way. So probably like either an ABC or a WXY. Right, WXY would be more bullish because after a WXY, you look for the highs. Right, so, okay. So if we want to count this as somewhat of an impulse, then this high needs to be a 4, but this cannot be your wave 1 because there's overlap, which means this 2 or this 2 needs to match this 4. That's a bit of an issue. 1, 2, 1, 2, 3, 4, 5. Yeah, and then all of this has to be a 4 and a 5. It doesn't really. Let me put it on the chart. 1, 2, 2. And wave 3. Wave 3 might even be the shortest wave. 1, 2, 1, 2, 3. Yeah, let me just put it on the chart. Okay, we're just puzzling. 1, 2, 1, 2, 3, 4, 5. It doesn't look good, can't deny. But at least we put it on the chart so that we have a look. Okay. Blue wave 3 is long. White wave 3 is not the shortest. Also, this has to end there. Okay, so the 3s are not the shortest. Yeah. Doesn't look too great, eh? Does it? So this 4 preferably is a flat, not a WXY. WXY needs to be a flat, but it's not a flat, or a triangle, but it's not a triangle. So preferably you're looking then for a diagonal because of all the overlap. Meaning you have 1, 2, 3, 4, 5. That's it's pushing the boundaries a little, but and wave 4 did not touch the 618. This wave 4 did touch the 618. So this is the one that I must have been talking about in my text. Wave 4 touched here. And then there's the gray line. Wave 1 and 4 do not overlap. And then there's that gray area where Kennedy states price action of wave 4 can overlap as long as the end of wave 4 is not overlapping. In all honesty, I don't like overlap between a 1 and a 4 in general, unrelated to the price action. But I know about the gray areas, so is it invalidated? Is it not? There's no overlap between 1 and 4. The 618 is officially not an invalidation for a wave 4, but it significantly decreases the probability. So I was confusing the 618 with the overlap of 1. So in theory, there's no overlap with 1. So in theory, you can have a 4 here being a triangle. In that case, that is then what you'd look for. A, B, C, D, E, triangle, that's your 4. Then you get a 5 wave down in your 5. Then you get a bigger flat, A, B, C, and a 4, and a final leg down in a wave of 5. There is no hard invalidation. Wave 3 in blue is the longest. Wave 3 in white is longer than wave 1. The price action of blue 4 is not touching the 618. Price action of white 4 does touch the 618, which is not great. Wave 3 here can clearly be counted as an impulse. The start, yeah, that's low time frame stuff. Not too bothered in everything that happens on the lower time frame. Wave 5 is an impulse, and then 1, 2, 1, 2, 3. But can this be a 4, 5, 4, 5? 1 second. We have overlap. Yeah, we do. So overlap between this low and that high, meaning this should not be a 1. So if we want to count this as a multi-1-2, it's going to be 1, 2, 1, 2, where then this low is going to be wave B of a flat, 3, 4. Now your wave 4 is overlapping with the price action of wave 2, not wave 1, which therefore, there you go, does not invalidate the impulse. And then you have a second 4 and a final 5. So, basically, can we analyze this as a 5-wave structure? Yeah, we can, no? There is a way to count this as a 5-wave move to the downside. Double 1, 2 in the beginning. Triangle in a 4, 5, 4. This has to be some sort of a flat, right? Low time. And then this should be a diagonal. What's not very nice here is that the price action of the diagonal is not contained inside the two trend lines. Let me quickly have a look about this. Diagonal, diagonals. Just reading. Yeah, I already thought so. So there's no statement that says it has to be contained, at least not in the rules and guidelines section of each wave of Elliott Wave International in the book, Elliott Wave Principle. So, but I maybe in the text, I should check that part, but this, you don't really like to see it. But then again, is it an invalidation? 3, correction, 3. This has to be a correction. This is your 5. Yeah, it's a very short little 5 compared to the 3 and the 1. I don't know. Again, on Solana, there is a way to count this as a 5 waver, which is what I have here on my chart. You're either looking at a zigzag family structure or a 5 wave structure, which means there is risk for another leg down. So what's more important now becomes the structures here. But we've been looking at Solana now for a while, so I don't want to spend too much time. One, two, 1, 2, 3, 4, 5, 4, 5. 1, 2, 1, 2, 3, 4, 5, 4, 5. Potential for a first move up. This looks like an impulse down. Quite a clear 5 wave structure to the downside. 1, 2, 3, 4, 5. Correction. So 1.618 touched. So not great probabilities that this is a wave B of a flat in an ABC. Probabilities are higher. You get a first structure, second structure, and then your last structure. So probability is higher. You got something finished here, but then it would be a 3 waver, not a 5 waver, because price retraced all the way up here and even took out this high. The probabilities are higher. This is a 3, which does increase probabilities to continue ranging / take out the high. So that's the 4 hour. We touched the weekly, move down into the point of control support. To the upside resistance, 196. To the downside support, 106. Fill that. There's not much going on. Okay, that was a long look. Mantra. Yeah, so Mantra is working its way to the downside, right? So that's also what we explained in the video, where after a high volume move, right, what you're going to be looking for is a grinding structure, right? You want to see volume moving down, creating some lows, moving into areas of support before eventually you're going to be looking for price to then move back towards the upside and create a bit of a bounce. So, I mean, this is a high time frame analysis. I don't even really know what levels did I check. We are currently at the weekly. We have a value area high just below us as well. If I toggle on this, let's see, weekly time frame. What does the PVP give us? Bullish bias on Solana. Yeah, another leg up to take out the high would be nice. The issue with Solana is that the move down from all-time high can be counted as a 5. So it requires more patience, and instead of counting the move down from all-time high, it's more important to look on the 4-hour time frame and look at the move up from the recent low and the recent move down from the local high. That will give you more information compared to the move down, because the move down, it has the opportunity to be counted as a 5, and therefore you can't neglect the fact you might have a finished 5-wave impulse on Solana, and you're looking for more downside. So the 4-hour time frame is more interesting, but the local move down on the 4 hours since the recent local high is seemingly corrective. The most bearish scenario would be a double 1-2, right, to the downside. But yeah, okay, to the downside here we have 0.15, some support, 0.14, currently at the weekly. Then down here, still more support at the 786. So I mean, you just gotta wait. Just gotta wait for price to stabilize on such a coin. All right, so eventually you're going to be looking. You want to see some longer sideways ranges. So first big move down, bit of sideways, move down, more sideways, move down, more sideways, volume dropping, and then you're going to be looking for the curvature, no? Double 1-2. Let me actually have a look here. So if price can touch the 886 that I put on my chart now, at 162.8, probabilities are incredibly low. You're looking at a 1-2-1-2. even though this, of course, is this an impulse? 1, 2, 3, 4, 5. There would have need to be a diagonal, would be incredibly ugly. So, so you know, if you would take an 886 from this high to the low, I mean, you already invalidated the second one, but this would give a bit more trust. Touch 162.8 increases the probabilities that this is a 3, which automatically increases probabilities for more sideways price action / take out the high. That's going to be the bias. HBAR. Wow, I don't even have anything here except a fib and a number 2. Nice. Yeah, I mean, most interesting here is you're at support, by the way. You're at the order block on the daily, right? Aerial support. Touch the 886, taken from this low to this high. 886 here is touched. Low probabilities for it to be a wave 2. That's basically what it says. So either you're going to continue ranging or you take out the low. Basically, that's the general statement with the 886. Does this look like an impulsive structure though? No. Move down, move sideways, move down. Can we count a 5 waver here? Well, you need a multi 1, 2 in that case. 1, 2, 1, 2, 3, 4, 5. I mean, you need another 4 or 5, but this wave 4 is very high. So, I mean, let's for the benefit take benefit the down, do this, touch the 618 for wave 4. It definitely looks like a corrective structure down, not an impulsive move, even though here you touch the 886. So it's a little bit early to go at it, basically. I personally, I would prefer, so even though probabilities are higher, this is corrective, not impulsive. Can we count a multi 1, 2 here? Then this has to be a wave 1, 2. You need another 1, 2, basically. So I would like to be more patient, but that's my style. I'm not someone that snipes highs and lows. So what I would like to see is HBAR to touch the 0.26 level, preferably before taking out the low. Very likely it just continues ranging. And then at a later stage, you identify areas of support, and those are going to be entry areas. So if price can move up a little bit more, you get more confidence in the corrective nature here, avoiding a double 1, 2. Even though it does seemingly look corrective, yes, you are at support. So alternatively, if one just risks with a good risk-reward ratio and doesn't do stupid stuff, if you risk 1%, yeah, sure, I mean, you put your stop somewhere here in the middle of this gap, and you're going to be looking for price to reach the all-time high. Wait, is that the all-time high? No, it's not this high, right? So, yeah, I mean, that's... And then if it moves down, you lose 1%. Well, okay, part of trading, doesn't matter. But more like it would be more safe to see price move up, touch the 886, basically confirming a 3 waver down here, which then very much increases probabilities to take out the high, but nothing goes in a straight line. So one generally looks then for, okay, cool, we move up, look for retracements, identify your areas of support, and those areas of support are going to be entry areas. Those are going to be entry areas. Well, ICP. Yeah, so ICP bullish scenario is an expanding diagonal. Can't really get anything else in there. After diagonals, you do expect deep retracements. So therefore, the 886 here should not be taken into account. So in this case, for an expanding diagonal, you need a 1, 2, 3, 4, and then a final 5. You can see how 3 wavy this is, right? You have a 3 wave move up to create the high. So the question would be, might there be some sort of a flat in here, right? W, X, and maybe another Y, right? That would be a corrective structure, which means you would expect the low to be taken. Bullish would be a expanding diagonal, but no, WXY, that's your bearish, is a WXY, and look for a move to the downside. Bullish, I mean, this looks incredibly impulsive, so it's not great as a wave 3 of an expanding diagonal. 1, 2, 3, no, you can't. 1, 2, you took out this low, so there's no multi 1-2s. I mean, this is really 3 wavy, so a WXY is bearish. W, why is that W? Probably W here. WX, that's your Y. Double zigzag. That's the end of your correction. You would expect price to take out the low, some support at 3.16 if it gets there. You do need Bitcoin weakness, of course, for price to get there. That's a very, very steep decline. You're still at support as well. Do I have other confluence? No, okay. We're still at support. We're just ranging sideways on top of support. But the general bias hasn't changed, guys. So, yeah, compared to the video. So you can see here as well that we have our move down, right? Oh, yeah, okay. The volume is on. So our move down or our grinding structure, you get your sharp leg to the downside on a high amount of volume. And now you start grinding again, lots of overlap, more sideways structure. If you take a fib from the current high to the low, toggle on the 0.382, which generally is a minimum target for a retracement. We haven't touched it yet. So therefore, the bias would still move into the fibs, right? Even if you take out the low here, right? I mean, we're still at support, but if this, as per the video, bearish scenario was that this is a 4, and you look for one more leg down in a 5, and then you turn around, and you would expect to touch the fibs, touch some areas of resistance. So just got to give it time. You know, it was a high time frame analysis, but nothing changed as per the video. Frank the Tank, welcome, man. XRP, nothing changed compared to the video that I made as well. So I prefer to stick around on the higher time frames with these. You know, here XRP still exactly the same. So yeah, ICP is still the same. XRP is the same. Solana, I mean, this is a little different. I mean, at the end of the Solana video, I wasn't really confident in either or, because it's you can count the move down as a 5 waver. So more price action was necessary. And now that we had a little bit more price action, I could say a little bit more because of the local moves, disregarding the move down from the all-time high. So that is it. That's then what's interesting now is the local price action. Yeah, with XRP, I think I never really counted this in great detail per se. This must be old. What's this? Right, okay, that's 8-hour time frame. Start with the, oh yeah, this is what I did initially. Can we count bearish scenarios here? If an impulse, wave 2 is very long, 5 to 6 times longer than wave 1. That's not what you want to see. So an impulse down was low probabilities. Yeah, and in a diagonal, 1, 2, 3, you need a 4 and a 5. Almost got invalidated. 1, 2, 3, 4. You really need to take out the low, and the longer you range here, the quote-unquote more bullish it is. So it just doesn't look that great. And then if we look at corrective structures, this is a WXY. So you got your W either at one of these, you get your X either at one of these, and then you get your Y. So a continuation of the range, like basically Bitcoin would, I mean, this if you move up here to $3, I mean, Bitcoin could get an impulse in, and then the retracement of Bitcoin would be an impulse on XRP. So Bitcoin needs to stack another wave 1 and a wave 2, and then a 3 up And while Bitcoin is forming a 1-2, XRP is finishing the correction in that case. Okay, this is like the cleaner representation, I suppose. Triangle. Okay, more sideways price action. So the corrective structures do look better than the impulsive ones. So I personally on XRP still expect higher prices, but it doesn't really look like a correction is finished on XRP. That like this is the end of the correction and this is like a wave 1, 2 and off you go. It looks like we're still in corrective price action on XRP, and we're not gonna be finished. So we know our resistance areas and of course areas of support, but I'm not really looking at 1-2s at the moment. Arguably, your triangle is the most bullish because it's the shortest in time. You would look for a wave D, then a wave E, and then you go. It's the shortest movement in time compared to this scenario, which would take a lot longer, as well as this one, which also takes longer than the triangle. Most likely, at least this one. So, yeah. Hey guys, 1 hour 15 minutes. I'll have a look at ORDI and TAO very shortly, but then I'm gonna continue with the, what is it now? 7:15. Continue with the evening. I don't even know if I have ORDI in here. Or I one, although I do not. I don't even know what it is. Oop. ORDI. ORDI. Do we have a Coinbase chart? I do prefer Coinbase, but I don't think we have. So let's go to, oh yeah, forget, no. Is this really it? Okay, seems like, yeah. I mean, so I don't know, I think it was ICP. It was the ICP video where I explained that, look, ORDI is at all-time lows, right? We're at all-time lows. For me to be interested in any coin, I would need a 5-wave impulse up. I missed this move to the upside, but I don't care, right? And wait for the 3-wave corrective retracement, and that is the high probability entry right there. This is gambling, in my opinion. This is probabilities. I don't like, because we're currently at the all-time low. I don't. This is rubbish. Never count this stuff, right? We're just in a move to the downside. Is this an ABC? Maybe. Is this a 1, 2, 3, 4, 5? Maybe. I never count this move. I always wait for a 5-wave up. Could this be a wave 2 and then you get a wave 3 and a 4 and a 5? Sure, you can, right? It might be the case, but is that really the highest probability coin and setup that you can find on the chart? Now, this has to be a expanding diagonal, right? So your wave 4 has to be bigger than your wave 2, right? Which is the case. Wave 4 is longer. Wave 5 is by eyesight longer than wave 3, which also should be the case. So that's true. So from a bullish perspective, you have a 1, 2, 3, 4, and a 5. It's an expanding diagonal. Now, after a diagonal in a wave 1, you would expect a very extended wave 3, because of course, what you're going to be looking at as a bull is this. Now, again, these type of coins and these type of setups, it's literally if you have money to throw away, this might be place to put it. Right? It's just like, oh, whatever. I don't care. I won't even miss it. I won't even feel it. Right? Just, I have a few dollars, whatnot. I'll just put it in here. But this is not really something that I would put like a full size Bitcoin trade in, for example. Right? I won't feel, I won't really, I don't know, doesn't give that confidence. Anyway, that's your wave 1. That means wave 2 has to be corrective. We move to the downside. After a expanding diagonal, you do expect a deep retracement we got a deep retracement to the 886. The 886 in this particular case doesn't have the same explanation as usually with Bitcoin, for example, with the wave 1, 2, because wave 1 is a diagonal, so you would expect wave 2 to be deep, right? So the 886 then becomes a target and does not necessarily increase probabilities to take the low. What's more important is this corrective or impulsive? If this is corrective, probabilities are going to be higher to take the high and at a bare minimum continue ranging for a longer period of time and then reassess again at a later stage. Now, if this is going to be impulsive, we need either a 5-wave impulse or a diagonal structure. Let me actually start with the diagonals because you can see that we have overlap here. Now, let me start with an impulse. We can't count a 5-wave like this because we have overlap, invalidation. Multi-1-2 would require us to count this as a wave 1, 2, 1, 2, and then eventually get another 1, 2, just stacking 1, 2s, which also means that if price moves up to 9.25, the probabilities for multi-1-2s are very low, right? So, yep. And I'm not really looking at the 2, 1, 2. I mean, this has to be zigzag structure, 1, 2, 3, 4, 5, zigzag structure, 1, 2, what, 3, 4, 5, something in here. But yeah, 925 does the job, touch that and not looking at 1, 2s anymore. An impulse doesn't work, which means the only one remaining is a diagonal. A diagonal should then be like this, because wave 2 and wave 4 have to be zigzag family structures. So it's always the high and the low, right? This is not the end of a 2 in a diagonal. This has to be the end of 2. This has to be the end of 1. This has to be the end of 3. And we're going to pull a channel from there to there. So there's no trend line overlap. The size of wave 4 compared to 2. Wave 4 is shorter. That's what you like to see. Comparing wave 3 with your wave 5. Wave 5 is longer. That's not allowed in a contracting diagonal. Now on the linear chart, it's actually not a 1-to-1, but we move 50% down. So logarithmic chart is preferred because of the percentage move to the downside. And we are analyzing, what was this? Yeah, over 100%. So log chart is preferred. And on a log chart, wave 5 here is longer than wave 3, which would invalidate a contracting diagonal. On the linear chart, it doesn't. But one prefers the log because of the big percentage moves that we have here. So it lowers probabilities. So lowers probabilities for a diagonal. But it cannot be an expanding diagonal because 4 is shorter than 2. Which means the diagonals don't work, impulse doesn't work, and if you touch 9.25, multi-1-2s don't work, which means probability is higher to take the high, bare minimum, continue ranging. Could that become then your wave 3? Yeah. In a very bullish scenario, you would be looking for, of course, a wave 3, but be careful with coins that are basically ranging at all-time lows, right? Yeah. Be sensible. So yeah. Okay, everyone. Sorry, Chris, I just mentioned that ORDI and this one. ORDI and what was the other one? TAO. Those are the last two that I'll have a look at because I gotta go. TAO. Why 3 and not C? Oh, I mean, if you want to be bearish, you can label it a C as well. Yeah. So 1, 2, 3, ABC, it's the same price action, right? So C or 3, it's the same move. You're looking for a big impulse up, either a C or a 3. It depends on the 4. But what I like to see with these type of coins at an all-time low is, give me a 5-wave up, give me a 3-wave down. That's my entry, and then I happily trade the next move, and I miss this, but. Everyone has their own approach, I suppose. TAO USD. 1, 2, 1, 2, 3, 4, 5, 4, 5 looks like an impulse to the upside on a TAO, being a 1, 2, 1, 2, 3, 4, 5, 4, 5. Also overlap between the fours. That's actually what you want to see. It ends with a 5-wave impulse. So that's I don't need to label. Let me go up here. Volume. Highest in 3. Touch the 0.5, which is a common target for a potential 2 as well as Bs. Golden pocket is overlapping with the range of a wave 2, which is always interesting. Right? Main areas of support is the range of 4 and the range of 2 of a lower degree. So you're here looking for your 1, 2, 1, 2, 3, 4, and then 4, 5. And then you have lower degree 1, 2, 3, 4, 5. And then you have, of course, same as what Ilya says, this can be an ABC as well. Right, so you can count it 1, 2, 3. In a bearish scenario, you would count ABC. Now, therefore, it's interesting to know what are the areas of support, and is this corrective or is this impulsive? So you can see we always come back to the same question, right? Corrective or impulsive. On the coin that I just did, so daily profits consistently, nice YouTube name. On the chart that I just did, I prefer a weekly time frame, like high time frame impulse. So on a daily, on a weekly, preferably weekly, I see a clear 5-wave structure. When like with those type of coins that are just moving down all-time low after all-time low, I really like look at what was it? Look at was it SUI? Wait, which one was it? Was it SUI? Yeah. So if you go to SUI, you'll see that it created a very clear 5-wave move off the all-time low, followed by a double zigzag WXY to the downside. Now that's a great opportunity. That's always the best, like one of the best examples that I can give on how I approach looking at charts that are at all-time lows, but they haven't yet got an impulse up, right? So I actually don't know if this chart has more info, of course, but I just used the Coinbase chart here. So recent low, is that the all-time low? I don't know. Some people may know. Thank you, Crypto Gardenist. Brain is melting. Yeah. Elliott Waves is tricky, but it's very, very rewarding. So, you know, stay at it. Stay at it. Even I gave up on Elliott Waves for 2 months in my first year of learning. You know, may happen to you, but hopefully it doesn't, and you just keep grinding, because it's one of the best tools, right? So it's really incredible. But then yeah, 1, 2, 1, 2, 3, 4, 5, 4, 5, and also I didn't get to the level I am now in you know, in just a year's time. So take your time, you will get there. So we have that's the bullish scenario. Okay, corrective or impulsive. Well, there we go again, 4-hour time frame. There is the potential here for, at least that's catching my eye. Is this? So look, at the moment, of course, just looking at the chart, it looks 3-wavy, not 5-wavy. We can't count a nice impulse in here, right? In a 1, 2, 3, 4, 5. There's also overlap here. So if this is the end of a 1 or part of a wave 2, there is overlap with a potential 4, which is not preferred at all, right? 1 and 4, invalidation. 2 and 4, strong guideline that you don't want to see it. So can't really count a 5-waver down at the moment. It's not nice, not nice. Low probabilities also due to the overlap. Can we count diagonals down here? Well, if so, then maybe something here, but that would be according to trend lines. Oh, expanding. Yeah. And an expanding diagonal automatically has lower probabilities. Wave 5 should be longer than wave 3, which it is. But wave 4 is taller than wave 2. So in theory, there's the potential. Wave 2 is very shallow for a wave 2 of an expanding diagonal, though you preferably get a deeper 2, get your 3, get a deep 4, and then get the 5, right? And then get a expanding diagonal. Quite a shallow 2, but there's no invalidation. But still, if this even if this is a diagonal or 1, 2, 3, 4, and a 5, and this is part ABC, you're still looking at a three-way structure. Down, sideways, down. So unless we're looking at a multi-1-2, but then here we go again, right? Multi-1-2, this one is higher. You take a fib, right? And this level 421 is important. If price moves up and touch 421 without making another low, probabilities are very high that here you got to finish three-wave structure and you're looking for this high to be taken, at least continuing the range for a longer period of time. Price doesn't move in a straight line. So after an 886 touch, opportunities will be given, as they always are given. So you touch the 886, whatever, of course, the price action, 886, maybe you move up, grab a bit of liquidity, then you get a bit of range, and then maybe go up at a later stage, take the high, right? Just the moment you move up and touch the 886, know your areas of support, and those are potential entry areas. At the moment, though, this is seemingly corrective, not impulsive. From a very big swing trade point of view, it's quite easy. I mean, you're now at what? Oh, you're at the 382. Of course, perfect entry would be the 05 to the 786 area. So actually, oops, moving a little bit down would actually be nice, just because of the risk to reward ratio. And also, let me have a look at levels, monthly, that's too low, but still put it on my chart. Weekly, touched, not touched. I'll only do the higher time frames. This is currently set on month. That's fine. Let's go to the day. Okay, we also have a point of control here. It's also around this range, which of course is interesting. We have some resistance above us. You can also always still get a double zigzag. W, X, Y, double zigzag and up. Time. Okay, the low was made after the 382, which is fine. We still got enough time for a bigger correction. Weekly. Okay, so we also have a weekly level here. Just gonna holy moly. There we go. Now I don't have Atos for something like this, so can't use Atos. I do like to use PVP in that case. Was there also a monthly down here? Yeah, there was. Oh no, okay. Okay, that's that. Right, so these are the levels. Local support, local resistance, gap. You do have an order block here. So even though the horizontal levels are at 2.3, 231, this is an order block, which is basically an area of support. But in that area, this is interesting. Yeah, I mean, taking out the low would not be very great. You don't often see me use this. So we're still above the 886 line. Okay. Golden Pocket gave a little reaction, but 7.5, not much. Not much. Anything else that we can use? The volume profile. Volume profile of the impulse up. Value area low is also here, so this is definitely an interesting area. Okay. Yeah. So the area down here between 230 and 220 is very, very interesting support. If the chance is given, which is quite a big dip, 30%, same as ICP if you want to go to support. Bitcoin would need to get a bit of a move down as well, most likely. But yeah, probabilities at the moment, this looks better as a corrective structure. Move up can be counted as an impulse. If you touch the 886, as explained earlier here, probabilities are low for a multi-1-2. Can't really get a diagonal in here. Can't really get an impulse in here. So if the multi-1-2 goes out the window, it supports a bullish narrative. And one would look for price to still take out these highs at a later stage or continue the range at least. So. Okay, that's going to be it, guys. As mentioned earlier, the last two that I'll do is ORDI and TAO because I got to go. I wanted to stream for an hour. It's 1.5 hours now. No problem. I always love streaming and enjoy streaming, but I got to continue with today. We did XRP, had a look at HBAR Mantra, XRP, which others? I don't know, some others. ORDI, TAO. So, yeah. Thanks everyone for being here. Appreciate you being here at the stream. Enjoy your evening, morning for the people in like Kiwi in New Zealand. Afternoon wherever you live in the world. Tomorrow will not be. There won't be any update. That's why I live stream today as well. Because tomorrow I will be hiking the whole day with my dad, who is visiting. At the moment, we live in different countries, so it's nice to have my parents over and spend some time with them this week and next week as well. But tomorrow I'm going to be out and about. So tomorrow also the markets are closed, right? So at least in the US, which means that generally one would expect ranging structures. The weekend is coming up, ranging structures. So yeah, let's see what we get. But after today, generally don't expect too much fireworks on the charts and too much volatility, but you never know. So if anything mega interesting happens, I'll be maybe giving an update on a Saturday or Sunday, but generally that's not the case. And I pretty much covered what I'm looking for and the levels to keep an eye on at the beginning of the live stream. So on Bitcoin, of course. So yeah, that being said, enjoy your Friday. Enjoy your weekend as well. I will be active in Discord and Telegram. And if you have questions, I always have my phone with me. So no problem there. But have a good one. And cheers, David. Thank you, Cheese. Crypto Gardenist. Maybe a Band-Aid. How are you doing? Thanks for popping in, mate. I will see you again during the next video or, of course, the next live stream. Cheers.